traders, my name is Grigor, and in today's video I will give you an update on the euro dollar, Aussie dollar, dollar yen and gold. On euro dollar I'm still tracking a bearish wave pattern because of 5-wave decline from this January high, followed by a very slow and overlapping upward price action, which could be counted as a corrective move. So ideally we have completed a counter trend movement here, because on the 4-hour chart you will see that we can count 5 waves of decline. So here is this 4-hour chart, 1, 2, 3, 4, 5, followed by a very sharp rally, which still can be corrective wave 2, because we know that wave 2 count remains valid as long as the market is trading below the start point of wave wave 1. So this wave 2 must not retrace more than 100% of this move. Ideally we will see, based on the current price action, we will see a reversal from 78.6% retracement area. Okay, this is the final Fibonacci level from where I want to see a reversal to the downside in impulsive fashion. Okay, otherwise my wave count will probably be invalidated in days ahead. Okay, so we are still observing the bearish scenario for the euro dollar, but if from any reason the market will not reverse here, in fact if the bullish price action will start to accelerating and invalidate this wave count, then of course we have prepared other scenarios, which in such case, just let me find the wave count here. Okay, here it is, this alternate count for the euro dollar, which in fact shows idea of incomplete corrective rally from these 2012 lows, labeled as an A, triangle B, and now we are headed higher in wave C. So if the market will push higher here through this invalidations level, better shown on this daily chart, then we seriously should be considering the other bullish scenario for the euro dollar. Okay, so this is the count that we also need to keep an eye, but for now I'm still bearish on the euro, and will be looking for evidences of a downtrend continuation. Okay, now on the Aussie dollar, it's been a while since we made a video on this pair. Here on the weekly we are tracking a counter trend movement. This is an ABC. Okay, it's interesting that the wave C reached the levels, equality level compared to wave A, seen around 0.89, but for now our recovery from here is still only in 3 waves. So if we respect the direction of a trend which is down, then of course we need to be aware of more weakness here, because we obviously want to stay with a larger sentiment. So here's the daily chart. I'm still tracking an incomplete wave C down. This was wave 1, wave 2, an extended wave 3, wave 4 pullback, and we could see a sell-off in wave 5. Notice that this is a 3-wave recovery only, and here we can see that market is now testing, or actually already reversing slightly from this upper parallel trend line. This is the Elliott wave channel, where I connected the end point, termination point of wave 1 and wave 3, and put a parallel trend line at the top of this wave 2. And then of course if you suspect that we are in a wave 4, then ideally you will see a reversal from this upper trend line. Okay, so because this is still a 3-wave move, because we can see some reversal from this trend line, because we are at the former wave 4, I think these are all guidelines, important guidelines, which could send the Aussie dollar back to the lows. Okay, here on the 4-hour chart we can see this an ABC move, where wave C was quite similar to wave A. We have seen a spike to a new high. I believe there was a lot of stops above this level. Market cleared this out and reversed significantly to the downside, which could be start of a larger sell-off. Ideally, if we are correct, then we will see a 5-wave fall back to this swing low. If we can get this type of a price action, then I think that Aussie dollar weakness will be confirmed. Okay, of course, if the market will just continue straight up in the next few weeks, then I will adjust the wave count and maybe already call end of a wave C here. Okay, but for now the larger picture still suggests that we have room for lower levels. Now let's take a look also on dollar yen. On dollar yen daily chart, we were tracking this triangle for a while now. We called end of a triangle here because of this 5-wave rally through this trend line. Okay, this 5-wave rally is clearly evident on this 4-hour chart here. This is wave 1, wave 2, wave 3, wave 4, wave 5, and now it seems that we are trading sideways here. Notice sharp move down, sharp move up, and now we are reversing. This is ranged market. Okay, it's a sideways price action, so I suspect that this is a corrective price action in progress, which could be a flat correction because this is a 3-wave move into a new extreme. Ideally this will be an expanded flat where wave C should be also subdivided by 5 waves, okay, headed back to this wave A termination point. Okay, we have also here a 61.8% retracement area and as well this trend line. That's very important trend line from this daily chart, connected from these highs. Okay, we know that this, when this trend line is broken, then ideally this trend line will turn into a support around those levels, around 61.8% retracement area compared to this wave 1. Okay, so for now, for the near term, for the next 2-3 trading days, dollar yen could stay sideways and even bearish, but once we will reach those levels around 98, 30, 40, 50, we should be aware of a bounce to the upside. Okay, now I also labeled here the alternate count, which suggests that actually this was not end of a wave 4, but we are still only in wave D here, and that we'll see more sideways price action. I would go with this wave count if we will stay below those highs for the next 5 trading days. Okay, because in such case this wave 2 would already be taking shape too long. So now let's take a look on gold. Gold has moved significantly to the downside in this week. If you recall, we were anticipating and tracking this wave count on gold, potential bullish scenario 1-2-1-2. At the same time, we also mentioned that bullish and bearish wave counts are not confirmed because we did not had a lot of data. Okay, but at that time the pullback was only in 3 waves, so obviously we wanted to stay with a larger uptrend. But now, as you can see, market moved significantly to the downside in this week, and you can see this wave 2 is already much bigger compared to this wave 2, which means that this wave count is probably invalid. Okay, notice that also the current price action is now below this rising trend line. So I think that this is not a 1-2-1-2 scenario, but it's probably a completed 3-wave move. So if you recall, we were tracking this wave count also. This was our alternate count, where we highlighted incomplete decline here on gold, but we're keeping on this ABC rally, which, as I said, now appears complete because the market moved through the lower trend line, which I think it's now lower support line of a corrective channel, and we know when this trend line is broken, this usually leads to continuation within a larger downtrend. So I think that we are headed lower here within wave 5. We can already see some increase in volume and accelerating price action to the downside since this breakout occurred, which is a very important wide line for impulsive price action. So I think we are trading impulsively lower here, and on the 4-hour chart we can see the reason why. I think that we are heading lower. Notice that market made a very nice 1-2-1-2 bearish setup here, and actually the price action is starting now to accelerating after the prices broke below this trend line of a base channel. Okay, we know when this happens, it's an important evidence that market is trading impulsively. Okay, so the volume is increasing. That's why I see a sharp extended move, and this sharp extended move usually are third waves within a larger 5-wave movement. Okay, so because this price action is very extended, very sharp and directional, I think this is wave 3, and if that's wave 3, then we know that we are trading impulsively, which means we need 5 waves to the downside. So this is probably wave 1, wave 2, wave 3. Wave 3 will also typically reach 161.8% extension compared to wave 1. Of course, it can also reach a much deeper levels like 261.8% if wave 3 is even more extended. But based on the guidelines, the typical Fibonacci ratios, we could see a bottom here. It's also very significant and important level based in price. Okay, we are around $1,300 per ounce, so we could easily see a bounce in a corrective formation here back towards this trend line, which will then react as a resistance in this wave 4 and send prices lower in wave 5 of a larger degree of this black wave 3. Okay, so more importantly, we can see nice supporting evidences that we are trading impulsively lower here, which means that gold could sorry, I will remove this wave count, which means that gold could easily reach new lows here. Okay, we will be looking to the downside now as long the market is trading below this critical level. Okay, the latest swing low, swing high. Okay, traders, that's it for today, and I will catch you with new updates on Monday. Have a good weekend.